Hey everyone, welcome back to Dave's Market Explorer. If you've been focused on U.S. stocks and are thinking about adding some real global diversification to your portfolio, today's deep dive is perfect for you. We're looking at SCHF, the Schwab International Equity ETF, as of mid-February 2026. This is one of the best low-cost ways to get broad exposure to developed markets outside the U.S., covering major players in Japan, Europe, Canada, Australia, and beyond, about 1,500 holdings total, with an ultra-low 0.03% expense ratio and a trailing yield around 3.2%. As of the February 11 close, SCHF sits at $26.62, up 0.76% on the day, with a range from $26.39 to $26.66, and solid volume over 15 million shares. That's pushing YTD gains to about 9 to 10% and trailing 12-month returns well over 35%, with the ETF hitting near all-time highs in the $26.66 area and a 52-week range from $17.56 low. Is this signaling the start of a stronger international rotation? Let's break it down step by step. Starting with the chart and technicals, SCHF is firmly in a strong intermediate uptrend. It's holding well above key dynamic support like the Hull moving average in the $25.80-26.00 zone, and momentum remains constructive. The MACD line is positive with the histogram modestly expanding, pointing to sustained bullish drive without any sharp slowdown or reversal signs. Leading oscillators are in solid bullish territory. RSI in the mid to high 60s, strong and healthy, not yet critically overbought above 80. Stochastic elevated, but without clear bearish divergence or sharp rollover. This kind of setup typically means continuation potential with room for healthy, buyable pullbacks rather than an immediate top. Volume has backed the advances nicely. No exhaustion or climactic selling on lighter days, which adds confidence to the move. The conviction really builds when we look at accumulation and distribution signals. Chaikin money flow is strongly positive, showing robust volume-weighted buying pressure. Unbalanced volume continues trending higher with no stalls, flat lines, or bearish divergences. Institutions and smart money are still actively loading up. There's no real distribution pressure showing up. Rallies stay supported. Down days don't see heavy selling volume. This fits perfectly with the broader market theme. Investors rotating into international developed markets for better diversification, hedging against U.S. concentration risks, geopolitical uncertainty, and a softer USD that's helping boost ex-US returns. SCHF has been a quiet but consistent winner lately, capitalizing on cheaper non-US valuations and improving global demand signals. Now, the macro tailwind that's impossible to ignore. Japan's Manufacturing PMI confirmed at 51.5 for January 2026, back in expansion territory for the first time since mid-2025, and marking the strongest improvement since August 2022. Output flipped to growth, new orders, especially exports, surged for the first time in years with the sharpest export order increase in over 4 years, thanks to stronger demand from places like the U.S. and Taiwan. Employment rose at the fastest pace in months, backlogs build up, and purchasing activity jumped sharply. This is a massive positive for SCHF's roughly 20 to 25% Japan weighting. Think major names like Toyota, Sony, and industrial/financials riding renewed momentum. Europe is showing stabilization in services and manufacturing without new collapses, and the overall developed ex-US macro picture looks positive. Weaker yen supporting exporters, stabilizing global demand, and investors viewing international as a smart hedge if US tech or volatility takes a breather. In my updated system, which prioritizes leading indicators for early timing, A/D strength for smart money confirmation, HMA trend integrity, Japan PMI expansion gates, 51.5 plus locked in, and supportive global sentiment. The bias is straightforward and bullish. Hold your core position strong, ideally 80 to 85% or more of your allocation, to capture the ongoing trend, that attractive 3.2% yield, and true broad diversification across developed markets. Tactical adds in 5 to 7% tranches look highly favorable on any healthy dips back to $26.00-26.30, near HMA or EMA support levels, as long as accumulation stays as robust, Leading tools remain confirmatory, and Japan PMI momentum holds. No trim signals are flashing right now. Distribution would require CMF weakening, OBV stalling, and a clear macro reversal, none of which are in play. The outlook stays bullish into the rest of 2026. International developed equities are well positioned for rotation flows, value recovery, and diversification benefits. If you're already holding SCHF, thinking about adding on weakness, or just exploring more international exposure, let me know in the comments. Like the video if this breakdown helped. Subscribe to Dave's Market Explorer for more ETF and market updates. And hit the bell so you don't miss the next one. Remember, this isn't financial advice. Always do your own research and consider your risk tolerance. Thanks for watching. See you in the next update.